My helicopter was hit by a rocket-propelled grenade. No, not really. But we do live in a sensationalized, overhyped world, don't we? It's no different in financial services. There are a lot of financial people that prey on that. They exaggerate their products and services. They make a big fuss about some circumstance or situation, all with the very simple purpose of motivating you or motivating an investor to take action to buy their products or service over another. It's unfortunate, but that's just the way it is. You know what? Good products don't need to be hyped. Good products and services don't need to be sold or sold hard. Advisors, financial people, they've got a lot of titles. They don't need to push. You don't need to be shoved into things. The role of an advisor should be, and yes, I know I'm on my soapbox, should be to advise, not sell. Advise, to share with you ideas and options that they think makes the most sense for your circumstance and your situation and your preferences and what you're comfortable with, and they do that by listening. That should be their objective, not to sell whatever somebody is telling them they're supposed to sell, either their employer or somebody that they have a relationship with that is incenting them to behave in a certain way with compensation or other rewards of some type. All right, so there's my soapbox. I'm on my soapbox because I saw a situation not long ago where Sam, that's not his real name, but Sam was put into a bunch of gold, silver, precious metals because his advisor was determined, was convinced that a major market meltdown was imminent. And so, for 4 or 5 years, Sam was in these heavy metal investments and his accounts languished. They went up, but mostly down, did not perform well, while from 2009 to 2014, the overall market grew steadily and recovered, of course, back to pre-2008 levels, but also gained even further. Now, I know the story, like a lot of my stories, because I've had a personal experience with the person, and he came to me and said, look, here's what I'm doing. Long story short, we've since moved Sam into a much, much more diversified portfolio. He is not loaded up on all this hedged, world-ending investment strategy. Now, part of what we're talking about, or what I'm touching on, especially as it relates to people selling, and it's not just financial advisors, there are pitchmen on TV, and you've seen them. The Gold Pitchmen really have it down to a science. They prey on the individual investor's fear and greed. And that's the two big buttons that they pound on. You ever been in an arcade and they've got that whack-a-mole game where you pound the little thing that pops up? There's two things they hit all the time with the individual investor. One mole is the greed and one mole is the fear. And they go back and forth hitting both of those because it's effective. Not all, but a lot of investors respond to that. So the gold guys, the gold pitchmen, they tell you how the world's going to end tomorrow. We will suffocate under the weight of our national debt. Not making light of it, it's serious, but they would have you think that tomorrow the dollar is going to be worth pennies and that if you don't have gold, you're in big trouble. And if you don't do it, you're not very smart. Well, don't fall prey to that. Don't get sucked into that with gold or anything else. Most of these pitches are, the world ends tomorrow, buy my product today. Now, let me just digress and talk about gold because it's a great example. And you can take some of this thought process and apply it to a lot of other things. First, with any investment, the most important thing you can do before you buy it or agree to have it be part of your portfolio or agree that an advisor is going to include these types of investments in your portfolio, first thing is to understand why you're buying it. What are the merits and what's the reason? So let's talk about gold. there's a couple things right off the bat that make sense to think about and talk about with gold. Number one, a lot of people think about gold in this way. They think about it as a diversification and a way to potentially experience or benefit from appreciation of gold's value in the face of some event or some economic situation or inflation, whatever the case may be. If that's your objective, I will suggest to you that you consider buying gold in an ETF, exchange traded fund arrangement. Why? It's much more liquid. It's easier to put into your portfolio. It's easier to manage. Some 8 million shares a day trade with one of the most popular gold ETFs called, it's a SPDR, which is the S&P ETF that's available in the marketplace with the ticker, conveniently, GLD. So you buy it on the open market, millions of shares trade hands every day. That means it's pretty liquid, and it makes it also low in transaction costs. In fact, I would argue a lot lower than buying gold coins or bars or whatever the case may be from what you see on television. So GLD, if you want to include gold as part of your investment portfolio. Now, what if you want to buy gold for another reason? Let's say, and be honest, this is real important to be honest part. You want to get gold because you're really worried about a major economic meltdown. You're worried about inflation going into the hyper category. You're worried about major economic strife or shakeup, the dollar falling literally to historic lows against other currencies or against commodities. You know what? There's nothing wrong with getting some gold to allay those fears or concerns. If it helps you sleep at night to have a little bit of gold, have at it. Now, I will add this. If your real concern is a major breakdown of our financial system, then you may want to think about other things besides gold. If we have a real crisis, Armageddon-style crisis, and you need to survive this situation, you might want to think about other things that might be worth more than gold if we're talking about a barter economy where people are trading goods and services directly because the dollars aren't worth any more than they are to start a campfire. If that's how you feel, no one should judge you for that. But if that's how you feel, then how about some medical supplies? How about, I don't know, dried food? How about things that you can trade if you really feel that way? And maybe it's not a long-term scenario we're talking about, but maybe something happens within the banking system where there is a temporary freeze. This has happened in other countries. I don't think it's going to happen in the United States, but things happen, and if it keeps you up at night, why let the rest of your life be just full of stress if you can take some steps to put your mind at ease? And what's ironic about that is when you put your mind at ease with doing some things that you really feel like you need to do, you can relax a little and maybe feel more comfortable and then make good decisions in other areas. And if you do that, guess what? It'll help you plan stronger.